Brian Hewen from Red Sky was on the program on the 30th of March of this year. It's far from that 52-week range that we usually look at here. So you're down 3.9%. New Strike Capital is the one that's really been taking it on the chin. But you're still holding on to this one?
Yeah, I mean, we still have a long position in this. You know, for our benefit, just given we're a hedge fund, we're able to hedge some of the exposure out by shorting a basket of junior gold stocks, which is what we've done, just given the volatility in the gold space. And so we haven't suffered the fall that you see there. What's happened since then is, you know, clearly the momentum as well as the sentiment around junior gold stocks have fallen out of bed. So New Strike's caught in that problem. But since then, a couple of positive things have happened, and which we think is extremely important. One is they released their maiden resource, which shows a very, very nice resource of about 3 million ounces of high-grade, low-cost type material, and it's exactly what we expected. And so at least there's a valuation parameter that you can put around this company now. And secondly, they have ample cash on their balance sheet to, you know, withstand the volatility that we've seen here. The problem with junior stocks these days is, particularly in the resource space, if you can't raise any money, you know, you can't survive. We don't worry about New Strike in this aspect. They have about probably 18 months to 24 months of runway there. It'd be a very, very nice tuck-in acquisition for a large company that's looking for, you know, a high-grade, low-cost resource base. So we still like it.
Time now for the top picks.
Top Picks is brought to you by Questrade, where you can trade stocks for $4.95.
Top pick number one from Brian Hewen of Red Sky Capital is Bellatrix Exploration. You like this one in part because of its cash flow.
We love the cash flow. We love the potential catalyst that the company may see over the very near term, just given their tremendous resource base. It trades in line with the group, so it's extremely cheap, just given the amount of growth that it has. It has 40% plus production growth, best-in-class production costs as well as capital cost management, and very, very clean balance sheet. And like we said, we expect additional JVs to be announced, which allows them to potentially expand the resource and the growth even more.
Okay, so as this company is exploring for oil and natural gas, where does the stock go from here? What's your target price? Do you have one?
Yeah, potentially we can see the stock $9-10.
Okay, so that brings it up about 48% from where it is here just in the last year. So the catalyst for that is just doing what they're doing?
Doing what they're doing, as well as additional JVs. They have one JV that's been announced with a Korean firm that should be finalized in the next couple of months. And then they have other asset bases that the street hasn't valued at all, which we believe they're pursuing other JVs for.
How important are joint ventures for the success of this company?
Particularly important.
Yeah.
It's very expensive to drill wells. It's very expensive to pursue a very aggressive growth program. So that's the reason why they did the first one. And I think there's more to come.
And when we talked about New Strike Capital as one of your past picks, you were talking about it as a pairs strategy against a basket of junior plays. Top pick number two is the Market Vectors Junior Gold Miners ETF. Is this short that you're recommending today, that other half of that pairs trade you're talking about?
Yeah, that definitely is. We've been short the stock at around $15. So we've had a tremendous performance over the last very little while. What this is a basket of junior gold names, about 75 names. And what's interesting about these 75 names is that less than half of them have 10% of the market cap in cash. A lot of them are very marginal projects that requires very, very high gold prices to make them work. So we believe that most of them won't ever be built. A lot of them will run out of cash, and therefore, you know, that's what makes this an attractive short for us.
So how long would you hold on to a short such as this? What do you need to see to cover that position?
Well, there's two components to our short. One is that we're using as a hedge against some of the gold positions that we have. So as long as we have the long gold names in our portfolio, we'll maintain that hedge. We've also shorted additional amounts outside of just being a hedge, and that's really more of a trading position where, you know, if we see momentum in the space change to the upside and people actually want to own junior gold names, which we think is probably a later part in the cycle. If people believe in gold stocks and the gold universe again, you'll come after the cash flow generating large caps first. So we think we have time before covering them.
So you could do a New Strike as the other half of that Right, or another player like a Barrick Gold or a Gold Corporation, a big cap stock?
No, what we do is if it's a big cap name that we want to own, there's also a Market Vector's large cap gold ETF that you could pair it against. It's called GDX. The ticker's GDX.
Right.
We would probably pair it against that, just given it's more similar in nature in terms of the exposure, the cash flow profiles.
All right. Topic number 3 is IGM Financial with a 4.8% dividend yield. Is that the key reason why you're holding it?
That's definitely one of the key reasons why we're holding it. We like the dividend yield. We like the stability of the cash flows that the company's generating, as well. 2 other key catalysts. One is valuation is attractive. It trades much cheaper than CI Financial, which we believe is the best money management company in Canada, but it trades in line with AGF. AGF doesn't have any growth whatsoever. It's actually declining in growth, whereas IGM is actually experiencing positive growth. So one is I think there's a valuation discrepancy against its peers, and secondly, Mackenzie Financial has been an entity within IGM that struggled for quite some time. We're seeing finally positive trends in its cash flows, positive trends in its growth, in contributions, and so we believe that turnaround will provide a catalyst for continued good performance in the stock.
I'm amazed at the valuations here. We're talking about something with 2.6 times price to book IGM versus almost 5 for CI. Those aren't pricey in your books? No pun intended.
Again, book value I think is a difficult thing to measure. What I would say is, CI is known as one of the best management companies in Canada in terms of its cost management, in terms of its line of its portfolio managers, and its ability to deliver its numbers. It's second to none. So I think the premium is deserved.
Brian, great having you with us again. Thank you.
Thank you so much.
Brian Hewitt, Managing Partner at Red Sky Capital Management. That's it for this edition of Market Call. The encore presentation airs Tuesdays through Fridays at 8 p.m. Eastern, 5 o'clock Pacific. And Mark Bunting will take your calls live Monday through Friday, 6 p.m. Eastern on Market Call tonight. As always, please consult a qualified advisor before making any investment decisions. I'm Michael Hainsworth. Follow me on Twitter for guest picks, breaking news, behind the scenes here at BNN. Thanks for joining us. If you missed any part of the program, the website will have the replay, bnn.ca.